Hi and welcome to the Market Alert for Tuesday, the 24th of September 2024. Markets calm ahead of macro storm, but US a sovereign risk exploded higher. And US indices mostly finished with slight gains in a choppy session after weak PMIs and Fed rhetoric. And other news, China panics, cuts multiple rates and reserve ratio requirements, goes all in to prop up stocks. So everything seems to be unsettled at the moment. Goldman traders, gold buying on our desk has been relentless and silver is starting to move too, which is good news. Let's hope that's true. And metal mania starts soon. This is a monumentally important trend. De-dollarization is actually beginning to happen, about time. And we'll look at that in more detail when we get to look at the metals. But first, let's have a look at today's economic news. 9 a.m. German business climate, S&P Composite 20 HPI year on year, CB Consumer Confidence and Richmond Manufacturing Index. The news that it's alluding to in the headlines goes to Thursday with the core durable goods, that's one, and final GDP. And also there was another one that I read about. You've got the durable goods and our PCE on Friday, that was it, yeah. So they're the ones that are sort of being alluded to in the news there. This one, wasn't it? A macro storm, ahead of macro storm, and that's what it's, like I say, pointing to. Thursday and Friday, PCE and durable goods. Right, let's have a look at the markets and kick off with yesterday's Dow. So in the Dow, barely eking out a higher high than Friday before the market moved lower, but overnight the market still above the 5-bar moving average. The all-time high of 42,168 is in focus and no doubt could be taken out quite easily today, as the market doesn't really have any major economic news that's coming Wednesday and Thursday. So it's got the potential to do that. Yesterday the market sold off early, but in the futures market they brought the market back. In the pre-cash market, you can see again we've got this very choppy session in the cash. I'm just wondering whether there is some form of distribution going on here and just churning of stocks. Overnight the market, once again the futures moving the market back above the DP and the close, and again attempting to get things back towards the high, ready for when the cash opens at 2:30. Meanwhile, in the German DAX, yesterday the markets are managing to move up, but not closing above Friday's high. However, overnight, prices are above yesterday's high, which you can see there, and in the 30-minute chart, you can see them going through the high already. So yesterday, along with the Dow, shake out to the low. Market picks up the buy orders at the low. You can see that with the volume. Market moves higher, and even during the Dow's quick sell-off, for the first hour and then back, the DAX barely moving to the downside, 50 points and then back up. Overnight we've had a spike to the upside, we pulled back, found support, and now we're above yesterday's high for the German DAX there. In the S&P 500, similar to the Dow, the market above Friday's high yesterday, and the market trying to move up overnight. The all-time high, 5734.7, is going to be taken out at some point this week. And in the 30-minute chart, again, you see that sell-off early on and then back up, and barely skipping a beat in the S&P 500. But then again, 80-odd% of it is owned by BlackRock. So no surprise there. No surprise whatsoever. Easy to manipulate when you've got that sort of coverage in your portfolio. And overnight, the market above the DP finding support there and just moving up. Just needs to take out the two highs that have been made overnight there as well in order to move higher. In the FT100, prices are sideways to higher, already above yesterday's high. European-wise, the market's moving better than the US ones overnight. And you can see this again as we've already gone through yesterday's high in the FT100. However, yesterday morning was a different story, with markets moving lower. They then bounced higher before then heading back down towards the close and the low of Friday. before turning around and moving back to the upside there. Overnight, prices have found support at the DP, or just above that at the psychological level of 8,250, and now just trying to get through the R1 there, above the 200 MA in the 30-minute chart there. And in the US dollar, still above the 100 level there, obviously determined to try and stay above this level at the moment. It's interesting that we're speaking of de-dollarization in the headlines there, as gold and hopefully silver, I say hopefully, that depends on the manipulation and whether it's allowed to run or not, moving higher, which is going to impact on, of course, the dollar price. Let's have a look at the metals. So yesterday morning I said silver was likely to move lower, and sure enough it did. However, it recovered, and overnight price is now back above the 5-bar moving average. So maybe what Goldman Sachs are saying is true, that silver is about to follow. But yesterday morning we saw that sell-off down to the S2. The markets then came back at least 68% of that move, or 62% in fib terms. Let's just draw that in. No, it was 78% retracement there. So back 78% before the market retraced again. But overnight price is now moving up, trying to take out yesterday's, or well, not trying, that will be too strong a word at the moment, but needs to take out 31.16 in order to move higher. Meanwhile, gold buying continues, 26.37, $3,000 is on the cards for this before Christmas by the looks of things. And overnight, again, you can see the market above that high. Did sell off yesterday morning, but not as badly as silver was forced lower. And then the market rallying and taking out the high, whereas silver retraced 78%, gold retraced over 100%. And overnight, I say the high has been taken out there as well. A few other things to bring to your attention with regards to the metals. This is an interesting chart that I found yesterday of the gold silver ratio that goes back to 1862, and the graphic illustration of this is fascinating. The 4-day bank holiday, this is how they close the banks down when they're bringing in a new monetary system. That's why they're called bank holidays. Everybody thinks it's time for a jolly. But the real meaning is that the banks shut, bring in a new monetary system, like the next time it will be CBDCs, central bank digital currencies, of which the Bank of England already has its website set up. Let me just show you that. So there you can see the digital pound is en route. We are looking for at the case for issuing digital pound. This type of money is known as a central bank digital currency. It would not replace cash, really. And you must think we came down the river here on a banana boat or something, but when something is in, it's in. It never gets rescinded or redacted. And there you can see all of it there, the next steps of the digital pound. You know, again, take the notice of the, this, would it be safe and all the rest of it. It's coming. It's already being tested around the globe, and Nigeria have already adopted this as well. 122 countries are trialling it. So anyway, just going back to the gold-silver ratio, that was a situation there. And of course, they wanted to stop people from hoarding gold and silver, which will be out of the central bank digital system there. Then we had Bretton Woods, etc. But notice, this is where it gets very interesting. In 1980, when Thatcher allowed the US investment banks over to the UK, and then the manipulation of the price and suppression of silver started, you can see that up to the 1940s with war, you'd expect that sort of thing to occur with the gold-silver ratio. Then everything calmed down, and then once we started to print money and came off the gold standard in 71 with Nixon, then you can see what's happened thereafter with the gold-silver ratio and the suppression of the price of silver. I don't know what the lowest ever was, but that looks around about 15 in 1970 there, as we can see. So you can see at the moment when we're up in the realms of here, where we're at 86 at the moment, you can see how this market has been suppressed. If we go to, let's have a look, see if we can find a long range one, a month, that's what we're after. And then we just squish the chart down. there, so you can see again how prices have been manipulated and whatever for years from the 80s with the gold silver ratio, coming down to 30 there in May 2011, and then of course that's when the silver hit $50 again, and then after that they had to hammer it, as you can see there. This is the COVID job, 120, 130 to the 130 gold silver ratio, and that was an absolute buying opportunity. That was, I took advantage of that while others were worrying about sneezes. I was watching the gold silver ratio. It was unbelievable. They forced the price down to $13 an ounce, sent the gold silver ratio to 130, and it was just a boon time to actually buy there. But look, we're still in these areas here of 19. You can see how this has been used to manipulate the price, and it's clearly seen in this chart here as well. Also, the article that we saw earlier, Metal Mania starts soon. I've had at least a dozen Uber drivers pitch me on suspected investments and basically saying, but none of them, as it says here, interestingly, I've never had a driver or a barber for that matter pitch me on gold or silver. On the odd occasion I've been to London. I actually did this with one of the black cab drivers. We know, he asked me what I did, and I told him about the gold, the silver, etc. This is going back about, well, it was BC, before COVID, so 2018, 2019, when gold was about $1,200 an ounce. So yeah, I mean, it's a no-brainer really. I just wish that I've had the awareness and certainly the cash when Gordon Brown sent the price down to $289 an ounce. We haven't seen nothing yet as far as gold, and particularly with the escalating war situation as well. Right, let's have a look a bit further down, because central bankers are buying by droves. I've mentioned this many times in the market alert as well, which you will have been aware of, and which countries there are listed as well. According to the World Council, gold central banks added 37 tons in July alone. Well, that's because of war situation escalating as well. So yeah, it's going to be interesting to see whether they let silver move higher or not. And at the moment, of course, it's not. It's still being suppressed. I mean, it's up, of course. I mean, you know, in 2019 it was $13 an ounce, so it's up, you know, huge percentages. But it's not where it should be. Let's put it that way. It's done well to get that far, in all honesty. So yeah, let's see what happens with regards to this going forward. But it's interesting to see it starting to make the news. Right, let's have a look at the trades for yesterday and a quick look at overnight before I conclude. So the intraday 2-minute chart, the market was down initially, prices then bouncing a bit. We had all of the flash news to contend with as well, which I've warned before can be very choppy, and the market certainly was. So prices sold off initially. We saw the Dow futures also move lower. Prices went down to the low before they came back and ignored the first two flash economic news items there. Market then settled down a bit as it moved back up to the DP and the 200 MA, and then prices started to move lower. We had a sell signal before the news there, the flash news from the UK. Was that the UK one at 9:30? Yeah, I think it is. And prices then obviously sideways prior to this, 2 losing trades there, and then the market moved down, as you can see, down to the psychological level before prices then attempted to move back. There was a potential buy that wasn't filled, and now we've got the news out of the way, and then the market just drifted sideways all the way through the morning, just gently moving higher with the Dow futures to bring prices up before the cash market opened, which seems to be a good trade at the moment, sort of mid-morning. Prices then opened with the Dow. We had the US flash, which again, market didn't barely react to. We then had a potential buy signal with prices trading up to the scalp, and then reversing, and then a potential sell there that moved down to the 200 MA and the DP area before then finding support and trying to move back to the upside, but very choppy during yesterday, so hopefully we'll have less choppiness today and more direction now the flash news is out of the way. Let's have a quick look at the overnight prices and see what they're doing. We're already above the highs we saw earlier, which you can see there. The R1 is the next upside target, but don't be surprised if we get a bit of a correction first, and the high could be retested as well before moving higher after this. Okay, I've gone on long enough this morning, but I wanted to bring those other bits and pieces with regards to the metals to you. So let's see what happens today, and have a good day. And as ever, thanks for watching. See you in the next.